A lot of people ask us which life insurance should I actually buy, term insurance or whole life insurance. Now on the surface, they might seem similar, and they do, but both give your family money if something happens to you. Both are life insurance products, but deep down, they work very differently. And the cost difference, huge. That's why I'm here to break it all down for you in plain English with real world examples and zero jargon. So take note that this is one video you don't want to skip. So let's get started. I'm Shashank and you're watching Ditto Insurance, and we've helped over 8 lakh Indians make smarter insurance decisions with zero spam and honest advice. We can do the same for you as well. Just head to the link in the description and book your free call. Okay, let's start with the easier one, that is term insurance. This is the most popular type of life insurance in India. This one's quite simple, as I mentioned. You pay a small premium every year. In return, your insurer gives you a large life cover, let's say 1 crore rupees. And if something happens to you during your policy period, your nominee will receive the full amount. No tax, no delay, complete 1 crore transferred. But and this is important, if you survive the term, you get nothing back. The policy just ends. It's like renting a safety net for a particular time. You pay to stay protected, but if you don't need it, you don't get the money back. Now, let's flip the script and look at whole life insurance, which works very differently. The policy doesn't just cover you for fixed periods like 30 or 40 years, like how a term plan does. It covers you till age 99 or even 100 in some policies. That's why it's also often called a permanent plan. Also, whole life insurance includes a savings component as well. So while a part of your premium pays for your insurance cover, the other part builds something called as cash value, which is the money that you can access later for emergencies, loans, or, well, even retirement. So in theory, whole life gives you protection and savings. Sounds much better than a term plan, right? Hold on, not so fast though. This is where most people get misled, and let me tell you why. Because for the same 1 crore cover, a term plan may cost you 12,000 rupees a year, but a whole life policy, easily 30 to 40,000 rupees per year or more. That's 3 to 4 times higher. And why is that? Because the insurer knows they'll eventually have to pay. With term insurance, there's a chance that you survive the policy and they don't pay anything. But with whole life insurance, the payout is guaranteed, either when you die or when you turn 99. So they charge you exorbitantly and accordingly as well. Now, think about it. When does your family actually need that protection? Usually between ages 30 to 60, because that's when you're earning, raising kids, paying EMIs, and building wealth. And by the time you retire, your kids are probably earning, your loans are repaid, and you've hopefully built your retirement fund. So your financial value to others reduces over time. And that means your need for life insurance also reduces, right? Which is why term insurance, a large cover for a specific period, is actually designed to match your life's needs. Whole life, on the other hand, often gives you insurance long after you actually need it. But what about that savings component in whole life? The cash value that I mentioned? Well, it's there, sure, but here's the catch. It grows very slowly. Much slower than mutual funds, FDs, or even a PPF, because the insurer deducts admin fees, commission charges, and other costs before growing your money. So it's definitely like a piggy bank that grows, but with a leak. And yes, you can borrow against that money, but any loan you don't repay, well, it gets deducted from your death benefit. So while it does feel like an investment, it's not the most efficient one. Now, let me simplify this with a very quick analogy. Term insurance is like renting an umbrella for a rainy day. It's cheap, effective, and keeps you dry when it matters the most. The work's done. Now, whole life insurance is like buying an umbrella made of gold. Yes, when you walk around with it, it looks fancy, promises value, but costs a fortune. And you're probably using it long after the storm has passed. So there is no point. Do you see my point? So who should actually buy whole life insurance? Well, very few people. Let's say you have a lifelong dependent like a child with special needs who will never be financially independent. Then yes, you might want a policy that guarantees a payout whenever you pass away, whether that's at 55 or 95. But even then, the cover amount must be meaningful. A 1 crore cover bought today won't be worth much in 60 years. Now, that's thanks to inflation. It might barely cover a few years of care. That's why you'd need to go big. Think 5 crores or 10 crores for the benefit to hold value then. And that makes whole life plans even more expensive. Some HNIs also consider these plans for estate planning, but most of them eventually realize that setting up a trust or investing separately gives them better control and returns. So why do people still buy whole life plans, you might ask? Simple, because they sound good, they're marketed really well. You hear guaranteed payout, savings plus protection, and think, why not? But no one tells you that you're paying lakhs extra for benefit that you may not need. And insurance companies, well, they're happy to sell it. They price the risk well, invest your premiums, and walk away with a profit. And that's why at Ditto, we always start with your actual needs, not the features of the product. If your goal is protection to make sure your family is okay if something happens to you, term insurance is the best and most affordable option. If your goal is wealth building, invest that money in SIPs, FDs, or PPFs, not inside an insurance product with high internal charges. And if you're someone who says, I want something back from my insurance, well, we got it. In that case, consider a zero-cost term plan. These give you the option to exit later and get your premiums refunded. You still get a large cover without locking into an expensive product. So folks, that was it from my end. And if you found this video helpful, please drop a like and comment if you have any doubts, and we'll try to answer them. I will see you in the next one. And until then, happy insurance hunting.